Welcome to MFX Center's 2-Minute Trading School, where 2 minutes a week can change your trading life. Before progressing further, let's look at the disclaimer. In today's video, we'll be talking about best 3 candlestick pattern which can actually make a trader more profitable. So before going into the candlestick patterns, we should understand how many types of charts are there and which are the highly used different types of chart that a trader may use. There are bar chart, candlestick chart and Renko chart, but the mostly used chart style is the candlestick. Candlestick chart came from a Japanese style and it has some names which are related to the Japanese culture, but with you and me trading in the Western market or even your domestic market, we can use this style to understand the market better and make some great profits out of the market. So what are the 3 best candlesticks? On our opinion, that is pin bar, engulfing bar and indecision bar. We have, I think, known about the pin bar, engulfing bar and indecision bar, but we don't know, and most of the traders don't know, that how to use these candlesticks with the better profitability ratio. So in this video we'll be going through those techniques to understand the market better, to understand the candlestick better, and use them for profits only. So the first one is the pin bar. Pin bar is also known as the rejection bar. Some call it hammer, some call it inverted hammer if it's a bearish, and some call it hanging man or shooting star. There are lots of names to it, but let's tell it as a rejection candle. Okay, it is best used with a combination of the psychological price level like 0.05 or 0.10 like this, and with strong support or resistance level. If you can understand, if you can draw support or resistance level in the chart, you can actually make great amount of profit just by trading the pin bar. I have a friend who just uses pin bar to trade and he is profitable 80% of his time, and he always trades the pin bar with the trend, and it is highly profitable when traded with the trend during the third wave commencement. If you understand the wave analysis, it will be easy for you, but if you don't understand, I'll be showing you how you can use it. The first wave that we see is the impulsive pressure we get, then some correction, and the third wave, when it is forming, if you find a pin bar, it will be helping you to get a great amount of profit with less risk and greater reward. So we need to trade the pin bar mostly from a dip if you are trading with the trend, and if you're trading counter trend, then you should have a pin bar with a very long nose or wick or shadow, and which should have a little body. And it is better if you can have the pin bar inside the previous candle and it closed there. Like it is a bullish candle, we saw bearish pin bar and there is a bearish body inside the previous bullish body of the candle. Okay, and must close and provide an indication. It should, and the bigger the shadow is better when you are trading with the trend or counter trend. But for counter trend, the bigger the shadow of the nose or the wick or shadow, it is better. But sometimes pin bar can also fail, and if a pin bar with a long nose fails and the price goes upward in this kind of situation, that means a failed pin bar is an indication that the trend is going to continue and you should trade with the trend. So that is one of the biggest things. Like if we see a pin bar like this and the pin bar is taken out with a candle like that, then we should understand that we should go against this pin bar and we should trade with a bearish pin bar that was away before that. Then the next candlestick pattern comes is engulfing bar. Engulfing bar, there are 2 types of engulfing bar like the pin bar, but there are different types of engulfing bar that we can see in the market, like BEEB, BUEB, BEEB, BEEB and BUEB. All these things, there are lots of theories about behind this, but what we need to understand is that the bigger the engulfing bar, the better, because it shows where the market momentum is shifting. So if you get an engulfing bar from support or resistance level, it will be helping you to make great amount of profit from the market. And engulfing bar is mostly used to counter the trend rather than going with the trend like pin bar. So if an engulfing bar is bigger than the previous bar, the more it is bigger, the better. If it is quite same as previous, or like only 20% bigger, it is expected not to work like this engulfing bars, because it doesn't quite get over with the previous momentum. So the bigger the engulfing bar than the previous bar, that means you have better chance to make profit with this bar pattern. If you see over here, there is an engulfing bar which pushed the price higher, and it continued higher. And whenever we see an engulfing bar which engulfed 1, 2, 3, 4, 5 candles, 5 previous candles, this is called a very strong engulfing bar, and it was from a resistance level from where previously the price pushed lower as well. So whether you are trying to trade counter, you should understand, or you should know where is a kind of a pin bar, engulfing bar is, rather than a pin bar, because pin bar works better with the trend, but engulfing bar works better counter trend. If you're going to get against the trend, you should have a engulfing bar, and the bigger the engulfing bar is, the better. The next important bar is indecision bar. Indecision bar is also known as spinning top or spinning bottom, or sometimes doji. It does indicate that the market momentum is indecisive. To trade this indecision candle, we should mark the high and the low of the candle, and upon break of this high or low, we will be trading the pair or currency pair or commodity, whatever you are trading. But we need to understand that a complete break and close above this candle or below this candle will be helping you to find a definite trend in the market. It can be used for or against the market, no problem. For example, this is an indecision bar, or you can call it doji, and whenever it was broken below with the next candle and it closed, it is indicating that the price will be moving lower. And in this one, whatever we are boxed or circled with the blue bar is broken below, and it has already gone down. We can see over here there is an indecision bar from a level, and then we saw an engulfing bar. And we should understand that a break above or below this spinning top or indecision bar is required to actually get into this trade. If there is no close and if there is a kind of a rejection, we'll be not getting into the trade. We need a complete break above or below this indecision bar, overall high and low, to get into the market. Okay, so indecision bar does not need to be from a level, but if it is from a level, that is more powerful kind of candlestick pattern to trade with. But for better understanding or for better accuracy, you must understand the market context. Market context always helps a trader to understand the market and what the market is telling to a trader to do, and how to be and how to react on the market cycle. And the market context does answer an important question: should he trade or sit on the sidelines? So is the market ready to trade with the long-term goal or the short-term goal? So for understanding the market context, one of the best solution is to join the MFX University. The link is provided in the description below, and for advanced trading lessons to level you up, you can join MFX University with the lifetime membership. You will have all the access. If you're a standard member, you will be getting all kind of access to trade the most advanced kind of candlestick patterns and how you can make yourself more profitable in the long run. So thank you for watching this video, and if you have any questions, please do write in the comment. Please try to subscribe our channel and like the video if you have learned something new. And if you have any questions, if you have any kind of suggestion for us to make videos on, just write in the comment. Thank you for watching this video.